Hi, this is Dustin with Dustin's Dollars. Today I'm talking about Knightscope. I'm going to be answering a question that I got asking about how many robots Knightscope would need to deploy in order to become profitable. So before I begin, let me remind you that I am not a financial advisor or a financial professional of any sort. All opinions that I express in this video are mine and do not represent those of any company or any other individual. I currently hold a long position in Knightscope. So basically this video should be for your entertainment purposes only because I could be wrong about everything that I say in this video. You need to do your own research before making any investment decisions. So I got this question on one of my recent videos from Pedro Gonzalez. Thank you, Pedro, for the question. He said, "Hello, do you think you can calculate ballpark how many K5s and K3s you need to break even?" I assume you're asking uh, how many robots does Knightscope need to have deployed before they break even and start becoming profitable. And I am going to do my best to answer this question today. I have a model for that and a couple parameters you can look at yourself and think about there. As a basis, I'm going to be using sort of this ideal unit economics. And they have profit margins of 57% as their target. It's down here in the corner. Hopefully you can see that. That is, let me zoom in a bit. You can see that they are targeting, have this model where they think that they will get to this point of having 57% unit economics per robot over a 5-year period of time. And so I'm going to go over some of my assumptions in just a moment, but I'm using this as a basis, or at least as a starting point, because if you want the honest and true answer based off of history, the answer would be never. So far, they have had negative gross margins. The more robots that they sell, if you extrapolate those numbers, you would only come to the conclusion that they are going to actually lose even more money. I don't believe that that's actually the how the company will scale. And if I did, I would certainly not be invested. So that's like your first answer, and I've seen a number of people make that case, and I think that does scare off a lot of people from the company. I mean, it's very it's an unusual situation, but again, I think that as the company scales, we'll see that change. So that's answer number one. But really, answer number two is I'm going to use this as a starting point for how I think about what additional profit is Knightscope bringing back to the company from each incremental robot. And so I'm using some of their 2021 numbers, and in particular, I'm pulling my initial starting point is their 2021 Q4 numbers. We don't yet have their 2022 Q1, although I expect that to be filed very soon, maybe even tomorrow. We'll see. But so here's the model that I have. My assumptions are that the annual revenue per robot is $61,400, and that roughly comes from this. I think that's an average. That might even be what they use here. Let's see. I can pull it up real quick. 309,700 divided by 5 because they're looking 5-year period. Yeah, that's, I don't know why I have 61,400. Anyways, that's the number that I had started with. I used this in some other projections. At some point, I derived this number. I think it may have been from their sales backlog is where I got this from the sort of a median value there. Suffice it to say, that's what I'm using here, and I'm going to vary this in a second so we can see what the impact is of that number. I'm assuming their fixed costs for their services on an annual basis are $4 million. And this is, my general thesis behind how they are, or why they are showing a negative gross margin today and why that will scale to be a positive gross margin in the future is just that there's some portion of their operations that is accounted for in the cost of services that is more like a fixed cost rather than a cost that goes up linearly with the number of robots deployed. So that is my assumption. I think if you go back and look at the numbers, that's pretty close to sort of what you see there. And then I'm assuming for every robot that is deployed right now, this is a parameter so I can change it. We can see what the numbers are, that they're going to get 50% profit per robot. 50% of that 61,400 would be profit, and the other half would be, consumed by the cost of providing the robot, servicing the robot, maintaining it, etc. On top of these, fixed costs that does not scale per robot. And then I also have this current estimate for how many robots I have deployed of about 110. And I'll get into why I use that, what I use that for in a second. So my general model here, and each of these columns represents sort of a different scenario. I just have 3 different scenarios here just for you to think about. Scenario 1 is strictly based off of their 2021 Q4 numbers, right? You get this from their 10K and subtracting off the numbers that they've reported in the prior quarter, for those 9 months. And you can see, you can get these numbers for yourself if you do the calculations, assuming that I didn't make any mistakes. And this is how the numbers play out. You have their R&D costs, their general administrative costs, and their sales and marketing. You add those up, you get their total operating expenses. And then you add on what I'm assuming are their fixed costs of services per quarter, right? Divide that 4 million, by 4, because we're talking about quarterly numbers here. And so then we add that to the total OPEX, and we get the, I should probably format these by as currency so that you know that they are, you can see what they are. And then we get the number of robots. Let me see if I can get this just to at least get less decimal points. So you add those together and you get the how much money they would need to recover in profit from the robots that are deployed. And then from there, we just divide by how much profit they're getting per robot. And then that gives us the number of robots that they would need here. So, for example, if they need to recover $9 million per quarter, and right now I'm assuming they get 61,400, divided by 2 for their profit margins, and so hopefully that's about 30.7 thousand. So I have 9078000 divided by 3,700. Probably should have checked this beforehand. Did I make a mistake in this? That can't be right. Oh, it's annualized. Yeah. So that is how many robots that they would need to deploy there. That's why. Sorry, I had to multiply that by 4, and then it'll come out. Yeah. So in this model, using their 2021 Q4 expenses, they would need to have almost 1,200 robots deployed in order to break even and then start becoming profitable. What I also did for each of these situations, for each of these scenarios, is I calculated how many years would it take them to reach that number of robots at a 50% growth rate and also at a 100% growth rate. And this is given the starting point of being at 110 robots deployed. Right, that is this assumption right here, this number. So I also looked at 2 additional scenarios. One, and I've talked about this before, one is their 2021 Q4 numbers, but reducing their sales and marketing expense quite drastically because of what I think were roughly one-time advertising expenses, because they were doing their raise and they were trying to attract investors to their stock. And we see this in their 2021 Q3 numbers, that they were more like 700,000, and then you see the 2021 Q4 numbers and it's 4.7 million. So it increases by a factor of, I don't know, 6 or 7 in quarter over quarter, like a 600% increase in advertising expenses. And so my hypothesis is that going forward, we are not going to see those massive advertising costs. And so I'm plugging in a number here that is one that I made up, that is higher than the 2021 Q3 numbers, because we know that they have hired some sales staff, but not drastically, not to the 4.7 million where they were just dumping a bunch of money into advertising. So if we use this scenario and we just say all other things are equal except they reduce their advertising expense, then and I call that out only because the advertising expense was huge. It was like half of their total expenses for the whole company, and obviously something that they have to spend. So they do that. Now you're looking at almost half as many robots that they need deployed, but about 55-60% the same. So you're looking at more like roughly 700 robots they would need to have deployed at a 50% growth rate from where they are now. That would be about 4.5 years. At a 100% growth rate, that would be more like 2.5 years. I also put in sort of my estimates, and I think I have a prior video going through this. If you have questions, feel free to ask, although there's not a whole lot underpinning this, just sort of what I see them, the areas where I see them hiring. I have my own personal, and then again, maybe I'm going to look like a total fool, for sort of trying to predict the future, but I have my personal estimate here of what I think their 2023 costs are going to be. I think their R&D costs are probably going to double. They've already alluded to opening up a new office and hiring there in Washington, D.C. So I think those costs are going to go up quite a lot. I think their G&A costs are going to go up some, but hopefully not a whole bunch. They have to hire on, as being a public company, they have more responsibilities there, and I think that's going to increase some. I did a 50% increase from where they were in 2021 Q4. And the sales and marketing, I'm expecting that to roughly a little bit more than double from their 2021 Q3 numbers. And again, that does not include that's significantly lower than 2021 Q4 because we are taking away a lot of that advertising. Because I don't think they're going to be trying to get folks to try to invest in their stock again. And I think that was a situation we won't see anymore. So if I use those estimates of where I think they'd roughly be in 2023, using all of my original assumptions, that gets you to about 5.5 years to reach that amount, a 50% growth rate, and 3.5 years to reach that point at a 100% growth rate. Now, a couple things we can tweak here to look at what the impacts are. I have this number for their annual revenue per robot. This is an average, of course, and this is actually low. I think if you watch my prior video about the robot pricing, I think at least from what we have to go on, it looks like the pricing for the K5 is more in the 80 to 90,000 per year range. And that does seem to be the overwhelming majority of what their sales are. And so if we put this number, let's say, up at 80,000 instead of 61, that changes things just a bit in their favor, right? Because they're getting more profit per robot. And you can see what the numbers are here. In the most optimistic case, you're looking at just 2 years plus a quarter at a 100% growth rate. If their expenses were roughly the 2021 Q4 less the advertising, that you could be breaking even in, let's say, 2.5 years, or maybe be profitable in 2.5 years. And then if you're looking at my estimate of their 2023 costs, right? Because I think that's more realistic when they're trying to look into the future, as they would have to grow into this valuation or grow into this size of the company. It could be looking at about 3 years at a 100% growth rate, and that seems like a optimistic but potential like credible path that the company could take to be breaking even in 3 years. This is my estimate of 2023 costs. I know 3 years to be past that. Maybe they'd be a little more diligent about controlling costs, and maybe they could actually stretch this out. Who knows? And again, these are just sort of my own projections. The company hasn't come out and said this, so I could be even off base here, but that gives you something to think about. If we do look at their ideal, or maybe illustrative unit economics, let's call it that, maybe not ideal, 50, if they also then now are getting more profit per robot, their margins are actually 57%. It has a small effect, not huge, but it does have an effect here where you can see, well, if they were able to grow at a 100% growth rate, then we're looking at 2 to 3 years before they're going to hit that point of break even and then profitability. So I think that's sort of how I'm thinking about this. Again, it's going to be, it is driven very much by what is their growth rate in terms of how long is it going to take them to hit this point of profitability, the growth rate, and what actual economics are we going to see in terms of margins, incremental margins for those new robots they deploy. Because if we're looking at this, and if they actually are only getting something like 25% profit margin per robot, those numbers go way up. Sorry, and I started talking about the years, and you were asking about how many robots. Hopefully you were able to just look at these numbers yourself if you wanted to. But if their profit margins go down, the number of robots they need goes up quite a bit. I think this went from a range in the most optimistic case of like 600 robots to now over 1,000 if their profit margins are more like 25% instead of the 57%, right? So if you're 57%, they needed, I guess it's 463 robots per this model. So hopefully that gives you some sort of answer. Just a couple assumptions that I did want to call out here, for anybody still watching and wants to sort of, check my work and think about this for themselves. Again, I did talk about how I'm deriving their margins here, how I'm assuming they're sort of fixed costs for their cost of services, and then they get, profit per robot on top of that. One other thing that I'm assuming here is that I'm assuming that they have no debt, as I believe is the case, at least was the case at the end of the year, or maybe the very beginning of this year, when they dealt with that convertible debt. But I mean, if they take on debt and they're going to have interest payments, then obviously that is another drag on profitability. And then the other thing in here is just what their, executive compensation is, right? We don't have really good insight into that. And I guess that would, roll up into some of these line items here, but that could vary quite a bit at this point if they start giving out a lot of compensation to executives. That could make a material difference here that hasn't been strongly reflected in the prior quarters, I think. So yeah, hopefully that answers your question, gives you at least lets you know how I'm thinking about it. Feel free to let me know in the comments how you're thinking about this. I'd be super interested to hear what other people have done for this. Yeah. So let's see, is there anything on the chat? Nothing on the live chat. If you do happen to still be watching, just to let you know, I do these videos somewhere between 10, 11 ish, sometimes 12. Tonight was almost midnight. 10, 11 p.m. in the evening, Eastern US time. So if you were interested in hopping on, oh, somebody is here. Hi, Dustin. Any idea about the stock performance and your expectations? So that is super. Thank you for the question, Mohammed. It's hard to say at this point, right? I think we're going to. So I have a lot of thoughts about this. Number one, obviously, Knightscope is unprofitable. Unprofitable companies have been being hammered right now, across the whole market, right? You've seen some tech companies that are even much closer to profitability than Knightscope that have dropped, 70, 80%. I think the stock's performance again was priced, even though it listed in at the end of January. That $10 per share was priced in last November, roughly at the peak of a lot of valuations in tech stocks. So I think Knightscope has fallen. It makes sense to look at Knightscope from roughly that November point rather than from the end of January point, because that's really when the pricing was done for the stock for the initial listing price. About the performance going forward, it's hard to see Knightscope really going up very much if the market as a whole it stays depressed as it has been. However, and I've called this out before, the volume that is traded on Knightscope is so low in comparison, right? If I pull this up, you can see the volume is like a couple 100,000 shares. And if you look at this, you can see it takes minutes. Right here, if I maybe zoom in, hopefully you can still see this just fine. If you zoom in here, and I'm going to go to 1 day. It's not going to show me here, is it? Knightscope 1 day. There we go. You can see there's entirely like 10-minute periods where there's nothing that gets traded. In here, there's like hours where almost no shares are getting traded. So the liquidity is so thin right now. It's hard to really believe the price, that there's very many people trading. I think there's a lot of people that are just holding it, right? And you see that in the super low volume. So, the price is, just one thing to keep in mind is that the price is driven by, the most recent trades. But I think there's a large majority of holders that are just holding right now. Personally, I'm optimistic about their Q1 numbers. I have a prior video talking about that as to why I think their Q1 numbers tomorrow are going to be by far the best quarter they've had for 2 years, 3 years even. And it'll be, sorry, I say tomorrow. I think this week, right? We should expect their numbers. I think tomorrow might be the deadline. I'm not 100% sure. I'm not an accountant, but I think they have to report like 45. I thought they had to report 45 days after the end of the quarter, and I think today or tomorrow would be pretty much it. Um, but I think when those Q1 numbers come out, if they're good, you could see a jump up. But again, it's hard to see Knightscope really going crazy. And probably not even, again, I hate to make short-term predictions, because I think anybody who makes short-term predictions, unless there's some special situation, is usually you're just trying to act like they have a crystal ball when they really don't. And I don't pretend to have one. But I think you could see a jump up if the Q1 numbers start to show growth in the company that really hasn't been there for years, as I, again, believe there will be, due to the comments that have been publicly made in terms of how many machines they have deployed. And also, you can see it in their prior, at the end of at the end of 2021 from their filing, in terms of how many robots have they assembled, right? If you look into the details there, you can see that. And then I think, but longer term, I'm bullish on the company. I think there's a lot of catalysts. I think they did a good thing locking down the ability to sell shares to B. Riley to fund the company, and sort of ensure some solvency to the company, as they're burning a lot of cash right now as they're trying to grow. And that's really what the company is predicated on right now, is high growth, and then the other big piece is starting to show better margins. If they can start to show that they're profitable as they're deploying more robots, that those two pieces together tell a pretty good story for the future of the company. So hopefully that answered your question. I don't know if you had anything more specific that you were curious about, but looks like maybe you hopped off. So cool. Thank you for the question again, Mohammed. I appreciate it. Looks like nobody else on the chat has any questions. So I'm going to hop off here. Thank you everyone for watching. I appreciate it, and have a good one. Oh, thank you for the answer, and waiting for good news in the near future. Yes. Oh, you're still here. My app must not show that. I don't know. That's weird. Yeah, absolutely. Thanks for the question. Appreciate it. And yeah, I'm hoping, for some good news in the near future too. So, thank you very much for watching, and have a good one.